Hello and welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and I'm joined as always with my co-host Nick Ponte. How are you, Nick?
I'm good, Stephen. Yes, all good. Who have we got this week?
So this week we've got another guest on, fantastic guest. We're actually getting a lot of English guests reaching out and wanting to come on the Scottish Property Podcast, and it is great. It's great getting so much diversity. Fuck that. Yeah.
Keep going, mate. There's no editing.
We're not editing it. Right,
there's no editing on this podcast. The good thing here, listen, I'll jump in and save you. The good thing about reaching out to some of our English friends is that we're getting a wider audience. And obviously, I mean, just today, actually, I took a call from an investor who's based down in England, who's investing in Glasgow, just bought a buy-to-let up in Glasgow. He actually met his wife in a Glasgow university, and then he listens to the podcast, and he's now bought a place up here, so it's good. I mean, there's great high-yielding investments up in Scotland, as we know. So with a lot of people coming up to the north, Manchester, Liverpool, they're finding that market really saturated as well.
And it's a lower entry point, which our guest, Rosie from Arch Investments, spoke about today, because she has to invest 5 hours from her own home just to kind of get that entry point where you're borrowing private investors' finance at the start, and you can't borrow that, you're not going to borrow as much, you don't have a track record and that bit of credibility. So she had to go north, which was 5 hours journey, and she speaks quite a lot about that, wasn't it? The problems and issues she had with doing that.
Yeah, no, I was interested in it, especially in kind of the mindset of investing kind of remotely and 5 hours away, and that I'm a bit of a control freak. I like to nip in here and there when I'm doing a refurb, make sure I'm on it, make sure the guys everything's happening. I've talked to you endless amounts of times, and I meet up with you for coffees and you tell me about all these amazing deals up in Aberdeen, and I'm like, maybe I should, so I don't know if maybe I shouldn't, and then I always never end up pulling the trigger, and then I feel like it's just a mindset block that I've got. But so there's all that we go into, and how she manages everything about finding the right team, because she's got a really good letting agent, which she said is the key to obviously her being able to sleep at night and not have to deal with all the stresses and stuff like that. So I think that's a really key factor. And
we also chat about how her and her husband have built up their kind of equity share in their property investment fund from doing up their own house and selling their own house and moving up the kind of property ladder.
That was interesting, and it's a source that a lot of people don't realise, that it's tax-free money if you flip a few houses that you live in. And you can use that for investing funds as well. So we'll cut straight to the interview with Rosie. It was great. I hope you enjoy.
Hello, Rosie from Arch Investments. Thank you very much for joining us on the Scottish Property Podcast.
Thank you very much for having me. Looking forward to it.
Brilliant. Can you start by telling the listeners a little bit about you, for those that don't know who you are or follow you on social media?
Yeah, of course. So as you said, I'm Rosie from Arch Investments. I'm one half of a husband and wife team. We're based in Kent, so very much the opposite side of the country. Different country to you guys. And we've been investing for about 4 years now. We invest 5 hours from home and have built a portfolio in the northwest of England, but live in Canterbury and Kent ourselves. For anyone who knows that. So my background before property, I came out of university and landed in a job in fundraising and marketing for a local hospice. At the time, I didn't realise that was going to give me any experience in property. But of course, fundraising, I've now used that for raising investor funds. Speaking to people about money is not something that came easy to me back then, but asking people for money for nothing versus asking people for money for a good return, it's a lot easier than fundraising for a charity.
Yeah, absolutely. Do you know something you touched on there as well? Is I see a lot of them on Instagram as as property investors that are couples. It's a husband and wife team, and I'm always nudging my wife like, there's another one that are smashing it. It's a husband and wife team. Why can't you come and help me in this business? But how does it work for you guys? Is it good?
Yeah, so Allan still works full time. He uses property as it's a great second income. He's not in love with property like I'm in love with property. It's not a passion of his. So he likes the strategy side of things, finding the deal, figuring out how it works, and then he sort of just leaves it to me. So I do all what he calls the boring admin, the letting side of things, all of that, basically my whole job is chasing solicitors, chasing brokers, chasing, as you probably know. So he doesn't get involved with that side of things. I'm very much on the ground. He's high level strategy side of things.
Is he quite happy in his job then? Because we hear it all the time. People want to quit the 9 to 5, but some people are quite happy, or they like that security of having the steady wage.
That's it. Allan thinks he's James Bond. he sells aeroplane cockpits for a living. So he gets to travel the world, meeting all sorts of airlines to sell all sorts of cool equiment for cockpits. So yeah, he loves it. So I don't think he's gonna give up for going and sorting out the toilet at one of our rentals, which is what he'd end up doing if he was full time in property.
Plus, it gives you that
5 hours away.
It gives you that stability as well, doesn't it? Do you know what I mean? So, if you hit a bad patch in property, or things are not working out, or you have trouble refinancing, or you've got a tenant that's not paying, at least one of you have got that steady income coming in, which I think there's something to be said for.
Exactly. It's the mortgageability side of things. It's really helpful. And as you say, if things go badly, also, we're still only 4 years into our journey. We're still in that growth stage. And as a lot of property investors will know, you always feel broke. So that extra bit of income coming in each month is much needed, because we're in that growth phase still.
Absolutely takes the pressure off. That's brilliant. You mentioned there, Rosie, that you invest 5 hours from home.
Yeah.
What was the deciding factor to start investing when you started out 5 hours away?
To be completely honest with you, we had no money. We got involved with this through like many people do, a property investment training course. So we put a lot of money into our education, and they had told us all about this magical place called the North. We did not know you could get houses we've bought houses at £40,000. That's not going to be a shock to you. It was a shock to me. So we didn't have the funds to start out, so we knew we could do it up north. But even still, we used investor funds on our first ever deal, because we just didn't have the capital. We'd just been married, just bought our first home, not a lot of capital in the pot. So
I think it was so much easier to borrow private investor finance starting off for a lower amount rather than where you're based.
Exactly. It's a much easier pitch on a £40,000-50,000 house. As a buy-to-let as well, of course, in the south, buy-to-lets, it's very difficult to get the return to get an investor on board, whereas up north, a much easier proposition.
Yeah, I think that's good. And if we could just spend a bit of time focusing on that, investing remotely, because it's not something we've covered a lot. I struggle with the whole concept, because I like to have everything in my own backyard, be able to drive past the properties and all the rest of it. Stephen's very different, right? He's obviously he stays in Fife. He invests in Aberdeen, which is what, 2.5 hours drive away?
Yeah, 2 hours. Yeah,
it's about 2 hours, right? So that probably doesn't seem a huge amount to you, but for me, that'd be too much. And I've struggled, and just recently, they're struggling to find deals here in Glasgow. The market's so hot, but I'm still seeing Stephen here doing well in his investing area. But I still can't get into that mindset. So how did you guys find it at the start? Were you quite okay with that? How did you get past that initial thought of, we're miles away, what if anything goes wrong?
I think if we hadn't done it at the very beginning, we would have never done it. We would have got used to investing from home. So we made a plan, and we decided to go up to the northwest every 3 weeks. So we would arrange viewings 1 week. Then the next week we would go. The following week would be all the due diligence and putting offers in. So we had that little schedule of 1, 2, 3 weeks, and we did that religiously for a good year. And we didn't have our first offer accepted for 9 months. So that was really tough to start with. Continuing to go up there, 5-hour journey there, 5-hour back in a weekend, because we were both working full time. So
Where was the area that you chose to invest in, or were there a few options and you were like?
It was, so we started by looking in Birmingham, because Allan had lived in Birmingham before on his grad scheme on rotation, and we really liked Birmingham. the prices were too high still, and there was a lot of competition from other investors. So we went a bit further north. Lots of people liked Liverpool at that time, and still do. And we thought, bit of a sheep, let's follow them up to Liverpool. We did not like Liverpool. Again, it was very saturated with investors. We found it very difficult to get to know the market. One road was very different at one end to the other end in terms of house price, in terms of tenant type, and all of that. So
did you just find it a bit risky there? Did you just feel a bit like...
Yeah, we also found that the agents didn't really have time for us because there were so many investors. And what we found is, it's when investing away from home, it's so important to get those agents on side. And if they don't have time for you, how can you get to know an area you've never even been to? Where we settled on, which was the Wirral, just over the water from Liverpool, 20 minutes over, but not so saturated with investors. And we liked the people, we liked the houses. The accent wasn't so strong, so I could understand it a bit better. So
you would struggle coming up to Scotland, maybe.
Possibly.
Do you know what I liked it as well? Like you mentioned, you did travel back and forward for 9 months before you found the first deal. That's a lot of things. That's a lot that people don't really understand, which is delayed gratification. You're working full time, you're spending, your majority of your weekends going back and forward to find properties for 9 months before you even get one. And even at that point, you're then funding it. You're then carrying out a renovation, I'm assuming, to then refinance it. A hell of a lot of work that goes into that project for probably over a year to get a couple £100 a month and building some equity. But people really don't get this whole delayed gratification thing of working now for the long-term future.
Exactly, and a lot of people, especially in the south, £200-300 a month is not of interest to them at all. So it's building that. So going up once every 3 weeks at that 9 months to a year stage, it snowballed. So all of that effort came good in the end. But
what was the driving force to keep you going when it was difficult and you still weren't getting offers accepted and you still weren't quite finding your area?
So the thing that I tell anyone starting out is tell everyone what you're doing. And that's exactly what we did. All our friends, all our family, social media knew that we were now property investors and this is what we were doing and we were going to be amazing. So after 9 months, it was pretty embarrassing having not bought a house and everyone was asking, how's it going? But that kept us accountable. The fact that we paid a lot of money for our education and learned all about what we needed to do, that kept us going. And the fact that people kept asking us, oh, how's the property thing? Yep, still haven't bought one. So we had to make it work, to save face if nothing else.
Love it.
I think with me, it's like, obviously it's the unknown. Like I'm sure if I went up to say Aberdeen and I got one under my belt and I bought one and it was cash flowing well and I got a good tenant in, then I'd get that confidence and I would be like, great, this is fine. So how did you guys, take the steps to do the research on that first one, to have the confidence of going in there knowing that it was going to work? Is there any top tips for researching the area?
I spent my whole life on Rightmove, so that was the first thing. But viewings, I now coach some people on doing this sort of thing from a distance, and going and viewing, even if you're not interested in the property, going and doing that viewing, speaking to the agent about that road, about the road surrounding it, walking the streets in that area, driving around, what else is for sale? Are they rundown houses? Are there cars in the middle of the day? What sort of tenant type are you looking at? And really getting friendly with not just the estate agents, but the letting agents, speaking to, first and foremost, going to the letting agents and asking where would be the best place for these little buy-to-lets that I'm looking at, before then going to the estate agent and seeing, do you have any of these? The relationships were huge. And then, of course, being able to get up there is another thing which was really hard. So when you do get a call from an estate agent saying, we've got something on, being able to sort of drop everything you've got that weekend, which was sometimes too late, and just getting up north to view it.
And sorry, on you go, Steve.
Acquisition, stuff aside, what about when you actually got the offer accepted and picked up the keys? What about the renovation side being that remote? How did you manage to build a team up of trades and builders?
So to start with, unsuccessfully, I would say, we had a recommendation from an HMO letting agent. Well, letting agent generally, he did all sorts of stuff, and he was jack of all trades. He had a build team, he sourced properties, he was fantastic, but he wasn't. He was a complete crook, screwed us over completely, and because we were 5 hours away, it was very easy for him to do so. So anyway, long story short, this guy's got some sort of prison sentence now because he's such a fraudster. But from there, the team that rescued us on that project didn't really want to come and do all the little bits at the end. They have been our build team up there ever since, and yeah, they've been, again, we've made sure we got the recommendations. Sometimes they don't count for a huge amount.
What kind of lessons learned from that first experience did you put in place to kind of avoid it for the next one? Like, was it more regular updates or payment more at the end, heavier way towards the end, or?
Yeah, so I think making sure that you've got regular communication and not trusting even the builders that we trust, not trusting them fully. You need to be having those phone calls, having those video calls. And on our latest project, for example, which was an HMO, 12-bedroom HMO, I was up there every week and I gave my job up for that. So on a large project of that size, you need to be there a lot. You can't just every 3 weeks. That's not going to cut it. Be making sure that you're keeping an eye on them and they're getting everything that you want in that project done.
And would you turn up and find that there was nobody on site sometimes when they said that they were, cracking on with it, catch them out at all, because I would presume it'd be quite easy to kind of pull the wool over your eyes, especially when you're 5 hours away,
Yeah, absolutely. So that communication was key for that. And every time we went up, we would log everything. We would take photos of everything, put it in an email or message, whatever was easier for them, and make sure they're coming back to us with all of that. I mean, snagging stage is always my least favorite for that reason, because it's awful, endless, goes on and on and on. We could have been snagging this HMO for a year, I'm sure, but at some point you have to draw a line.
So it's a case. So it's a case of you need to kiss a few frogs to find a few good people, don't you, to work with? Was there somebody, I always find there's always somebody, one person that you find that ends up an absolute gem. Is there anybody that you can identify in your kind of team now that you've got that really kind of helps you out?
Yeah, so we've got a couple of letting agents, one for our buy-to-let portfolio, one for our HMOs, 2 HMOs, 12 bedrooms. They're 2 6-beds stacked on top of each other. Our HMO letting agent has been a breath of fresh air. I've had 4 letting agents over the years. I can't find a good one. When you're 5 hours, I would manage it myself. I'm such a control freak. If I could, I'd manage it myself, but 5 hours away is just not realistic. So I've handed that over to him, and he's just brilliant. I occasionally check in, and we're fully let. Nathan from Porter's Lets, I'll give him a bit of a shout out. He's just he's a landlord himself, and he does exactly what I would want to do in every situation. He's firm but fair with the tenants. He's all about customer service with them, but also with me. And that's, yeah.
Do you find for your kind of the team that you've built up, that's important to have the people around you, property investors as well, so they kind of get it rather than just doing a job?
Yes, to an extent, especially with letting agents, makes a huge difference. I'm not sure I wouldn't want to be a letting agent managing other people's properties. I think it's hard work, but yeah, and we've found that with mortgage brokers as well. Our mortgage broker's fantastic for that, really good at thinking like an investor for us and thinking outside the box.
What about this idea of property being passive income? You hear a lot about this term, passive income. So now that you've found a good letting agent and stuff like that, I mean, how much time do you still have to spend quite a bit of time on the portfolio and the properties and stuff like that?
So we have a property down here, and we are building a portfolio down in Kent as well. So that is the growth of that is taking a fair bit of time. But the managing of the properties up north, it's not fully passive. It can never be fully passive because there's always going to be questions about maintenance or whatever else. I think we've got it to a stage where it's as passive as it can be, but of course it's still time in the week, and it always will be. Even if you go on holiday, you're still going to have your phone with messages coming through about, I mean, when the storm a couple of weeks ago, I was just panicking every time I got a message, please don't be my letting agent, saying the roof has blown off.
But does he not give you solutions? Like, because I always think good letting agents should give you a solution to the problem and say, look, we can fix this. And then really, ultimately, it's just you to make a decision.
Absolutely, yeah. And that sets him apart from the rest in that respect. I find most letting agents we've had don't do that. He very much does.
Yeah, good.
No, it sounds good. And when you went from the buy to lets up north into this HMO project you just touched on there, was that a scary step to build up into a bigger project, something a bit meatier as well?
Yeah, absolutely. And Allan will tell you that I didn't want to do it. I don't like to tell people that, but I didn't feel ready for it at all. And as I say, Allan very much blue sky thinking, strategy, high level, and then it gets passed to me. So I didn't feel ready for that, and I did get some coaching on how to manage a refurb of that size, because it was a huge step from I think the biggest refurb we'd done was sort of 25 grand, except our home, which was slightly fancier stuff, 40,000. But the refurb on this one was 210,000. So massive refurb in comparison. But it had fallen in our laps. It was fantastic numbers, and I can talk through some of those if
yeah, please do. That'd be good.
But yeah, we couldn't not do it. So we purchased that property for 172,000. It was a block of 4 flats that had been illegally converted 20-30 years ago, and there was no fire separation between any of the properties. You had to walk through the ground floor flat to get to any of the other flats. It was just not fit for purpose at all, and we wanted to turn it into more flats because we like our little buy-to-let model, but we couldn't make the numbers stack. So after a lot of planning drama that I won't go into, we converted it into we were allowed to convert it into 2 properties, both 6-bedroom HMOs. Purchased it for 172,000. We spent 210 on the refurb. I think it was 55,000 on fees. That includes all our angel investor interest, all our brokers, planning, everything else. And then the end value on that, we got 550,000. So really, really strong numbers. I think it was 171% return on investment or something ridiculous. We weren't expecting it to be quite that good, but the valuer could see the finish, and that was a commercial valuation based on yield. Oh,
based on 10%, 10 times yield on the return.
Yeah.
Oh, brilliant. And I'm assuming the cash flow on that one, brilliant, with 12 rooms.
Yeah, we get about 2.5 grand a month cash profit on that one.
Who's your kind of target market for your tenants?
So with that one, it's young professionals, and the Wirral is a funny place. It's not a funny place, it's a lovely place. It's got lots of these big Victorian buildings that lend themselves really nicely to HMOs. So over the past few years, there's been lots of investors coming and doing these lovely HMOs with big rooms, high ceilings. So we were a little bit concerned. We had put a dummy ad out to check our demand, but having not done HMOs before, we weren't 100% sure. But we've been really pleasantly surprised. We're sort of the top end of the market in terms of our finish and what we provide. So we were fully let very quickly.
And you think what sets that project above and being successful was the standard, the finish you done on the renovation?
Yeah, that's it. I also think a good letting agent helps. He's very much stand out with his customer service when he's showing them around. He's not just opening the door, off you go. He's selling the property, and he's throughout the process. He's there helping with anything they need. So in terms of them staying longer, it's only been let since August last year, but hoping that we'll have that longevity of tenants as well.
There must have been some big lessons learned in a renovation project of that size.
Oh, don't do another one. No, I was living up there 3 days a week towards the end of the project. So I would not be doing another one 5 hours from home. That was my biggest lesson learned. I would love to do another one down here, but 5 hours from home, living in the refurb with a blow-up bed was not fun. But I think something we did was get some coaching on how to manage a refurb of that size, and that's important in any type of anything you're doing in property. If you don't know what you're doing, especially if you're using other people's money, if you're using your own money, it's your fault if things go wrong, crack on, if you can take that risk. But if you're using other people's money, you need to make sure you're clear on what's going on.
That's a really good sentiment, actually. That's a really good point. And it's a lot of time that people won't be that cautious when they use other people's money coming off a training course.
Yeah, that's it.
What about, obviously, you're obviously sounding like you're doing them to high level standards, like for the right young professional market. Stephen, when he does his refurbs as well, I'm always surprised. Like, I see his pictures on Instagram, and it's really, really nice, high end quality refurbs. Down here in Glasgow, you can get away with a little bit less. You can get away with it on a budget, but you don't hear this talked about in the kind of education circle very much, I don't think. And it's about reinvesting back into the property, because if you're doing it to such a high standard and the market can be quite competitive, with a lot of rooms, HMOs on the go, then presumably you need to like set aside a bit, for the kind of upkeep, the maintenance, repairs and all the rest of it. Do you factor that into your figures at all?
Yeah, so I mean, our training course is always talked about this 10 or 15%, depending on whether it's a buy-to-let or an HMO, keeping that aside each month. So you have that when you come to need to do a new kitchen or a new bathroom. As I say, we're still fairly early on, so we haven't had to do anything major like that. It's little bits of upkeep rather than a new kitchen or bathroom. But when it comes to that, yes, we have a pot that we do dip into when we will clear out all our bank accounts if we find a good enough deal. But again, it's when you get to a point where you refinance in 5 years, you hope that value's gone up a bit. If you had to dip into that, it wouldn't be. We wouldn't love to do that. Once we've remortgaged once, that's it. We would like to leave it, but if it was in desperate need of whatever and we didn't have the funds there, then we've got that opportunity to remortgage.
Well, let's just talk about the money then, because I know you're quite a big fan of using equity from your own home. So talk a little bit about that and how you've managed to use that to your advantage.
Yeah, so one of our favourite strategies is using our home, almost flipping our home. So we've done that once in the home that we're currently living in. We bought that for 285, and we're just about to sell it for 460.
How long have you had it?
2 and a bit years.
Oof, nice.
And it was a wreck when we bought it. There was 4 zookeepers living in here, odd rotation. So as you can imagine, all sorts of stuff that I won't go into on the floor. Oh, it was awful. They hand-reared baby animals, so disgusting. So yeah, we spent about 40,000, so very much on a budget with that one, and yeah, selling for 460. So that money, we remortgaged it when we finished the refurb at 410, and now we're selling it at 460. So that's an extra 50 grand of capital that we're getting back, and we're now moving on to a new doer-upper, which we've been able to move up. So our first home, which was the one before we're in currently, was a two-bed terraced house. Then we've moved up to a 4-bed terraced with countryside views, very, very nice. And now we're moving on to a 5-bed detached. So it's a really good way of moving up the property ladder. We've found. So we're going to do a refurb on that. And then my next dream is a beautiful Georgian fronted house in the millions, but we'll see. That might take another 15 years.
It's a fantastic strategy that not a lot of people talk about. It's something I've done a lot myself as well, but even before I got married, in my wife's name, because it is your place of residence, so you're paying no ADS, and then when you sell it on, you're paying no capital gains because your primary place of residence.
That's it.
So,
yeah, exactly. It's and people don't think about it. I don't know why people don't think about it. I mean, I understand if you've got children, it's not so easy living in a refurb, but it's just such a good way to create wealth. And we've seen my parents do that. They bought a derelict farmhouse 25, 30 years ago and have renovated very slowly. They've not done the whole remortgage in 2 years, pull as much money out as possible, but the wealth they've created in that one property over 25 years is incredible.
Yeah, so it's basically like Stephen says, it's like tax-free income in effect that you can reinvest elsewhere.
Yeah, and it's a great place to start. If you're not sure where to start in property, you can go and buy your, if you've got your own home currently, you can go and move home into a doer-upper, and you don't
And
have
that's
to have,
it's a low entry point, because you're only needing a 5-10% deposit on your own place of residence, and then you're not needing 25%. You don't need to pay DS and a huge amount of fees. It's a lower entry point. Like say, you could do it up on a budget. You don't need to do it quickly on a project because it's your home.
Exactly.
So instead of renting somewhere else or living in a mortgaged house somewhere else and doing up the property, you can be doing it as you go over a longer period of time.
Yeah, I guess the downside to that, of course, is if you sell your place quite quickly, then you can't buy another place. Then you're going to have to move in with your mother-in-law or something like that. So, you know what I mean?
Well, I mean, yeah, you joke. We are we managed to get a very good deal on our next home. In buying that, we've agreed to not buy in a chain. So we're in the process of selling our home, and then we've got probably 3-month gap. So we are moving into my mum and dad's granny annex for 3 months. So exactly
I like that it's an annex. Like, so you've got a.
Well, yeah, we did it a few years ago as well. When we were doing the major bit of the refurb in here, we moved in for a few months. So whatever it takes is sometimes what you've got to do, and we're happy to do it. A lot of people aren't, but it can pay dividends.
Yeah, no, when I was a kid, I lived in a caravan for a while while my mum and dad were building a house. So yeah, I remember that.
I was talking on my mastermind group call last night, and I remember growing up in my dad's renovation, like I say, that took them 15, 20 years to do. And I remember getting ready for school in front of the gas fires with the bottles, with the 3 bars, freezing cold, like chittering, trying to get changed. And it's like, you do that kind of shit because you know that it pays dividends and it can get you where you need to go. It's
exactly.
like making a sacrifice, isn't it?
That's it, exactly. And that's property investing all over. It does take sacrifice, and all these youngsters who want to get on the property ladder, it's doable if you make sacrifices. I think is key.
Yeah, absolutely. What's the end goal for yourself and Allan then? What's the plan for your property company?
So we're looking to expand our portfolio in the southeast now. We've done enough of the travelling 5 hours for the last.
What's happened to the Wirral? Like, I mean, surely, it sounds like you found something that works there. So why no more properties up there?
Nick, I think I advertised it far too much on social media. So everybody has come to the Wirral, and finding deals on the Wirral now is so saturated, possibly more than Liverpool. It's crazy. So we've looked at different strategies. So in the southeast, we're in the process of buying 4 units, 2 commercial with 2 flats above. Got a deal on that because people aren't looking at commercial, but we've got 2 new 10-year leases, very safe, really good rents on those. So we're diversifying a little bit because of the market the way it is. We're also buying a block of freehold flats as well, again because not everyone's looking at those. That's not to say all your listeners need to go and look at freehold flats. I mean, they're in Scotland, so probably not too much competition, but
no, we got a lot of competition up here. Yeah, definitely.
Yeah, but not for me. You're not competing against me.
No, I get your point. It's
interesting because I felt the same when speaking on this podcast for the last 2 years since we've been doing it, and constantly talking about how I've changed my investment area to Aberdeen. And even when I went up there last week for valuations, someone approached me like, "Are you Stephen Clark? I listen to your podcast every week. I just bought my first investment property." I was like, "Shit, I need to shut up here. I need to keep my mouth shut."
But I mean, great that the podcast is getting so well known.
But I've created myself all the competition in Aberdeen now. Hopefully helps it. The way I look at it is it helps the city grow a little bit quicker, and the property prices start to rise back up quicker. Then
absolutely,
we'll all win.
Yeah.
Brilliant.
Social media, how have you found that? And has that brought you any private investors?
Yeah, absolutely. That's one of. I mean, we love social media for networking with other property investors, and gaining motivation, inspiration from what other people are doing, and it's led me to being on this sort of podcast just like this, which is great exposure, and really enjoy chatting to like-minded investors. But yes, one of the main reasons we put so much effort into social media is from that investor side, that we are looking for investors all the time, and we've gained a good following over the years. We've been consistent with it, not so much now. Life's busy and everything else is going on, but to start with, we were very, very consistent. I made a New Year's resolution one year, posting every day on Instagram, and I stuck to that, and that's really where we grew that following. The algorithms liked it, I don't know. So yeah, investors, we've never really had to ask for money. We find that the money side of things is a lot easier than the finding of the deals. I don't know if you find the same thing. Finding the deals is hard, but if you find a good one, the money's easy.
That's what I was going to ask you. I mean, you said you love property and all that. We all love property. That's why we talk about it so much. But what would you say your most hated part or the dreaded part of property is? The downsides, the stuff that causes you the stress, like.
So we have, until selling this home now, we've never sold a house. And I tell you what, it's the most stressful thing I've done in property, selling a house. I thought buying a house was supposed to be the more stressful part, but selling, all the questions that you get asked about your lovely home, I'm like, you're very lucky to be living in our lovely home. So just be quiet now. No, but apart from that, planning has been an absolute nightmare on the one project we've gone through planning on. So I do not enjoy that. But apart from that, and chasing solicitors is one of my least favorite as well. But apart from that, I do enjoy it, and I wouldn't change it.
One thing for me is, like, you think you've built up a good team, you worked with people for years and years, and then, I've just noticed recently, like, I mean, my mortgage broker that I've used for a while, he's probably listening just now, actually, but it's like he's taken 3 weeks to get back to me on an email, and I'm like, this is just unacceptable. And like, just chasing people, you shouldn't have to chase professionals. I think once you start having to do that, it's time to change, broker or whatever. But just that kind of thing, just sometimes it just drains it out of me. But
yeah, absolutely, especially when they're touting for business there and wanting more business, you just think, look after the business that you've got. Yeah.
Absolutely. I tend to agree with that. You touched on there about your social media as well, helping you gain cash. Is that what's kind of built you up the investor pot and brought you back down to your kind of nearer home for your building your portfolio? Is that bigger bit of investment you've been getting?
Exactly. When we started out, we had very little funds, as I mentioned, so we went north, but now we've built that investor base. We can come a bit close to home and stop doing the 5-hour journey, which is just going to be a lot more efficient in every way.
And a lot of it came from Instagram, you said.
Yeah, social media in general. That might be people that we've met before who then follow us on social media, friends and family. If we weren't talking about it on social media, friends and family wouldn't know about it, because we're not going to a family event and talking to everyone about property. I mean, I would if I could, but make everything about property. But
I do, yeah.
Yeah. So
I've got no small talk.
So it's just a great way of documenting what you're doing, because otherwise people don't know. And the amount of people who have from school 12 years ago who are coming and asking, how are you doing this property thing? People from previous jobs that I haven't spoke to for years and years. People are interested in property, but if they're not sure how to get into it, investing is a great way to almost get your foot in the door.
Yeah. Shit, you just made us feel old there when you mentioned school was only 12 years ago for you.
Yeah.
No, it's been great having you on, Rosie. I really appreciate you taking the time to chat to us, and I know we've covered so much there. We've covered a lot on the journey. We've spoken a lot of details there. Where can people, the listeners, reach out to you or follow the rest of your journey as well?
Thank you very much for having me. It's been great. I am mainly on Instagram. We're Arch Investments on Instagram. We're on Facebook, LinkedIn, all the usuals as well. Our website is archinvestments.co.uk as well to find out what we're up to.
We'll post them in the show notes as well. Lovely. Thanks again for joining us. Really appreciate it.
Thanks so much, guys. Really good to speak to you.
Thanks, Rosie. All the best with your house sale. Hope it all goes well.
Thank you.
So, guys, hope you enjoyed the interview with Rosie. It was great to chat with her and their plans for their investing. And as always, if you could take some time to leave us a review, that'd be much appreciated. As always, we do the first Wednesday of each month for our property networking event. Stephen?
Yeah, absolutely. It's this Wednesday. I know when this will be released, but it's we're moving up tomorrow for Aberdeen. You've got Glasgow, Linda Martin and Gary Willis have got Edinburgh, and Kirs Sleamy and Paul Cummins have got Dundee, and they've all got fantastic guests on each of them lined up, which really looking forward to them.
Sorry, I need to get a dig in here. We don't need to promote Glasgow because it's always sold out, mate. So, but get yourself up to Aberdeen because Stephen needs as much support as you can get. So, thanks very much for listening, guys. Really appreciate the support and speak to you again next week.
Thanks a lot, guys.